Hello everybody, this is our second educational video. In this video I want to explore the nature of trend lines for you. So let's take a good look at the Bitcoin full historic chart. I'm going to put the chart into the Paint software. So we are going to analyze the psychological aspects of the technical analysis, okay? If you want to get a very widespread view and perspective about the mechanisms of the financial markets, I suggest you to subscribe to our channel and come with us with every video. I'm going to show you different aspects of financial markets. So here we are. In order to draw trend lines, some people have very serious obsession. For example, they might come and say, yo, you cannot do the thing here because we have some candles under the support level here, or for example here, or some candles above. It doesn't matter at all. If you go to the Investopedia website, you will find too many articles about the failure of the classic patterns of the Elliott waves, of the price action and other stuff. You know why? Too many of the pullbacks get failed because of different reasons, such as psychological reasons. But I want to explore the nature of trend lines, which we can be very realistic for drawing them. You don't need to focus on the little anomalies here or whatever, right? So what's the story? What makes support and resistance levels in reality? I'm going to put the label of support here for you. As you might know, supports are important because it's probable that the price will bounce up from the support levels, and in the resistance, such as here, the other side of the psychological aspects of the market come to show themselves. You know, I mean, when we are in the support levels, it's very probable that the market will get bullish. As you can see, this happened here, and here you see uptrend but with lower slope, right? And here you again can see that the price react. What causes these reactions in the support levels and the resistance levels? What causes them, my friends? That's what I'm going to explore today for you. Imagine that you buy, let's say here, right? I might put it in the green color. I intentionally deleted these two, support and resistance, because I want to show you something else. Imagine you buy here, you wait or hold until here, you are in a very remarkable profit. And if you want to calculate it, we use the measure tool here and drag it. You see this percentage is very attractive, but you don't sell here. Let's say you want to hold more. So what will happen next? Your gain will be much lower. In this case, you lose a part of your profit. 40,000 becomes 10,000. Too much, right? You hold it until here, and here you refer to the past. I mean, look at this. This is a resistance level, right? Technical analysis is based on the previous patterns and happenings. But why it is like that? Because of the people who are doing this, because of the people who draw these trend lines. That's all. This line doesn't mean anything. This line doesn't even exist. It is us that give the validity to the technical analysis. And in a market which most of the traders and holders depend and believe in the technical analysis, you can expect that the technical analysis will work much more better than in a market that most of the traders and holders rely on the fundamental aspects of the asset, such as the BTC or whatever. Okay, so if you see trend lines are so neat, so exact, that's because of the people who are in that asset, active in that asset. If the technical analysis fail too much, that means that the people do not believe in the technical analysis for that asset, or that means that the extrinsic factors are affecting the market too much, such as what the Mr. Elon Musk is doing with the Dogecoin. You know, the volatility of the markets make them unpredictable, and that's a huge unsystematic risk that I will never accept. I rather to trade on fundamental cryptocurrencies in the crypto market rather than shitcoins, for example, because they are more technically reliable, more technically valid. Because when some people want to buy Bitcoin and they are waiting for the good entry point, for example, let's say we are here, they wait until here. Why they do that? Because they see the past, the very past. And this is a very, very important line because of the historic nature of it. 2012, 22. That's 8 years, man. 8 years is too much. That's what's make this trend line very more credible. So that's why when you speak with the technical analysts, they say the trend line is more valid if the number of collisions to the line is more. They are more valid when the slope is not so much. For example, this line can be very more valid rather than this line. Higher slope means higher emotions, higher uncertainty. If it go up this fast, it can crash down like the fast speed of going up. But in this scenario, the market is more calm, the traders are probably more reasonable, and it's going a very nice job, you know? So, based on the things that I expressed for you, we can now come to this conclusion that most of the technical analysis is nothing but inspecting the psychological aspects of the traders and the holders. Traders can be persons, or they can have the legal representation in the market. They can be funds. They can be insurance companies, investing companies with huge amount of money. If they rely on this trend line, you have to move with them. You have to buy here. Getting a short sell position here is insane in that case, you know? And you can analyze this aspect of the thing with too many different instruments, such as the simple volume indicator. You see, the volume here is much higher than other histograms. That's because here we have a very, very, very great support level, historic 8 years. And here the volume is too much high because too many people are saving the profit and getting out of the market, and they are expecting something to happen because it's the halving time of the Bitcoin too, which we will speak about the halvings and the philosophy and technical description of it later in other videos. But I want to say that these histograms can speak with us too. Combined with the technical analysis, you can lower your risk increasingly in a very great amount. I hope that this video is useful for you. I expect you to practice or stuff in other charts or in whatever market you like, forex, stock markets, or whatever. And I want you to subscribe to my channel because I'm going to be very productive about the educational content that we are putting in the YouTube. Wish you all, my friends, very good day and night.